Hello guys, welcome everybody to day 21 of the trading marathon here on this channel. My name is Daniel and today's video is one of the most important videos of chart analysis because, or for me personally, or the use case that I personally have in the knowledge that I'm giving you today. And it will be all about the RSI indicator and how to use it, because it's basically the only indicator that I'm using personally for my trading decisions, in addition to Elliott wave and smart money concepts. And it doesn't only have one function, it gives us several different points of viewing it, or how to use it, and I want to introduce them to you very detailed in today's video because as I already said, it's in my opinion, it's a very personal and subjective matter, but in my opinion it's one of the most important things that you need to know, or that you need to really understand fully and also take into consideration when you have trading decisions to make. First of all, I want to first of all, I want to show you yesterday's half marathon. It was number 20, since I didn't show it to you yesterday, since I was running after the video. And also today, I'm as you can see, I'm very fresh, since it's what is it right now? Well, it's already 3 p.m. but after I recorded this video, then I will make today's run, since I switched the time plan around. But well, now I want to answer to the question, why is this the only indicator that I'm looking at? Well, because Elliott wave already gives me such a clear way to view the charts and to estimate the likelihoods that I really only sometimes need some kind of decision maker when I have several scenarios that are technically possible based on the Elliott wave analysis. And for example, when there is clearly one count that I want to follow an Elliott wave, I don't really take the RSI into consideration. But every once in a while there will be a point where two Elliott wave counts are absolutely possible, and then I always take a look at least at the RSI and the different signals you can get out of it to kind of estimate the likelihoods of which one is more likely to play out. And I want to show you how you can do that as well. First of all, for the people who don't know how to use indicators, well, first of all, there are like hundreds of indicators. It makes also no sense even to use all of them, because most of them are not even, accurate. Many of them are even nice to use, but if you have a trading strategy based on 5 different indicators, it will be very, how can I say, you can always put some different settings in every different indicator and look at all the different time frames where the several indicators will be even different, and on top of that, if you change the settings of the indicators, they will be on top of that different on the several different time frames. So at one point it makes absolutely no sense to use too many indicators, because you will simply not be able to look through what's happening actually, because just imagine you have even 3 indicators are not nice, because you will get confused. You just imagine the daily time frames tells you 2 indicators this, 1 indicator this, you look at the 4-hour time frames, 2 indicators tell you this, 1 this, then and so on and so forth. What exactly will we want to do then? So that's why I'm personally really not a friend of having many indicators. That's why I at one point decided to just pick my favorite indicator. And that's why I also take my time for today's video. Maybe we will talk half an hour, 40 minutes, 20, I don't know yet, but I will clearly take my time and tell you every fact about it and why it is such an important indicator. You cannot say it's the best indicator. Maybe it's not, it's my favorite. And since many indicators are very looking at more than one indicator is, for me personally, more confusing than it even makes sense. Put in simple words. Maybe for you it's different. That's why I will also show you all the other indicators tomorrow. Also, maybe you don't like the RSI so much as I do, so then you will have the opportunity to choose another indicator that you look at tomorrow, in tomorrow's video, when I introduce you to other ones. But today we will have a very, very clear look, or a very clear overview about the RSI. Well, first of all, let's go over to a clean chart here, because that's my Bitcoin chart or my analysis on Bitcoin right now based on the Elliott waves. Let's go over just to the balance chart. There I have drawn nothing on the chart. Perfect. So if we take a look now, well, first of all I want to show you how to find the RSI indicator or how to find any indicator. As we discussed, we go on the TradingView side. We can choose here on the left top corner the asset we are looking at, and then you will find here right next to the time frames that you can choose the window which is called indicators. I mean, here it's in German, it says Indikatoren, but in English it's indicators. You will click on it, and then you have a search bar here where you can just put in the indicator you are searching and you will find it. I mean, I can also show you, like, that are all the indicators there are on TradingView, but as you can see, it makes no sense to use them all. So what I would just really recommend is picking one. But in this case, we look at the so-called relative strength index, okay? That's why it's called RSI. We will have two here. That's because I already had one there before. I just wanted to show you how to get one. Well, let's first of all discuss what the RSI actually shows us, okay? And then we even compare the two different RSIs we have here. And I will explain you how you can pick yours. The RSI is the relative strength index, and as you know, the word relative already tells us that there needs to be a relation to something that you compare the strength to, right? When you just measure strength, it's just how strong is it. But if you measure relative strength, you need to compare the strength right now to another strength that you are just comparing it with to get the relation, right? So, and the RSI is basically showing us the strength right now on this time frame in comparison or in relation to the strength on the previous candles. And you may ask yourself, how many previous candles, Daniel? Well, the number of candles you can decide by yourself. For example, you can get the 21 RSI, you can get the 14 RSI. This means it compares the strength right now that we have in the actual candle to the strength of the previous 21 candles. So if we are looking at the 4-hour time frame, then this indicator basically is telling us how the strength in comparison to the last 4 times 21, 84 hours was, which is pretty nice. If we look, for example, at if we change the number to, let's say, 5, well, then it's only telling us how the strength in the past 20 hours was, you know. If we would change it to 2, it would just tell us how the strength was in the past 8 hours. If we go, for example, over on the 1-hour time frame, it's obviously measured in hours. So the 21 RSI will show us the last 21 hours. The 14 RSI will show us the last 14 hours. If we go on the minute time frame, it's obviously measured in minutes, since it's always based on those candles, okay? So the RSI here, you can pretty well see it. The RSI here is always showing us the strength we have at the same time on our chart. And this is a really nice example here, because you can maybe remember from 2 minutes ago when we had the chart where my analysis was on. My analysis was showing us we should go down, right? So in our use case it will be like this. You will have, first of all, you will make your Elliott wave analysis. It will tell you, hey, we came down impulsively and right now up only correctively. So you may want to check right now, at this point where we are right now, hey, are we looking strong right now? Is this a high which is stronger than the previous ones? Or should I be, you know, like more bearish or more bullish? I mean, in general, you are already bearish since you have a bearish Elliott wave count. And you look at the RSI, you see, okay, so the high we are forming right here is way weaker than the high we had right over there. So there is no reason to worry from that perspective. Okay, even if we're looking at the lows here, they're even more bearish than the lows there. Because you can see also the RSI we made here a lower low, same way as on the chart. So if you even if you, for example, compare this low to this low, the right one was higher on the chart but lower on the RSI, which is even a bearish divergence. I will tell you all about that also. It will be one of the functions that you can use or that you can measure, but I just want to show you the concept. So you can basically compare different highs and lows to each other on this indicator and check out if the strength in comparison on this indicator was in the way that you expected it or not. So you can already see, if you don't know anything about Elliott wave and you don't have this expectation already and you just look at the indicator, well, it will be pretty hard for you to tell what's going on. You just know, well, we're a bit weaker here right now, but we can come higher and so on and so on. But you don't really know. But when you are already, when you have already a strong opinion how the market should behave based on something else like the Elliott waves, and then you go on and just compare on the RSI, if this will fit your picture, it goes really smooth. It's really nice to use. It's just a simple, nice addition that doesn't make you any headaches. You just see when you, for example, when sometimes it happens also you're in the wrong Elliott wave count, right? And sometimes the RSI will show you that. And you will then look at the RSI and say, that doesn't look good in my favor, huh? Okay, maybe I should go out of this trade or switch my opinion, So this is really just a tool that you can use in addition. If you only have that or only use any other indicator or them in comparison, I think personally you will go nowhere. Or at least when I tried to use only indicators for like 1, 2, 3, 4 months, it was at the beginning of my trading journey, like kind of 6 years ago. Well, I got nowhere with that, so at one point I just decided to learn more about other techniques, and then at the end I found out, well, the RSI indicator was actually nice. It's always pretty nice, but if you only have the RSI, you will go nowhere. But if you know something else and you have the RSI, it's really a nice tool. So, well, let's first of all delete one of those RSI from our chart, because we will only need to use one of those, obviously. I just wanted to show you that, there are slight differences on the indicators. And I will now also tell you, for example, if we use a smaller number on this RSI, let's say 10, then only the last 10 candles are taken into consideration, right? For the result of the RSI to show. And if we take the 21, it will use the last 21 candles. So what that means is also that if you use a smaller number, you will get faster reactions on the RSI. So if you want to base your analysis on a smaller amount of candles, since that's what you are looking at, or a larger amount of candles, since that's what you're looking at, then you can obviously fit the number to that. What I personally like to do, since I just want to know, are we strong or weak right now, and am I wrong in my Elliott wave count? So I want to personally, whatever time frame or situation I'm in, always look at a very common number of the RSI, and I can right now tell you, well, should I also, yes, I am making a screenshot somewhere for you, and here I will put it somewhere that I will show you here. You can make a screenshot of it, because these numbers are the so-called Fibonacci numbers, and maybe you have already heard me saying or talking about them at some point. Fibonacci numbers are, you don't even need to understand the concept of them. I don't want to make it too complicated for you. Fibonacci numbers are the common numbers used by traders and chart analysts to be put in several indicators. So whenever you want to choose a common number, or a number to put in any indicator or anything that has to do with chart analysis, choose one from the Fibonacci numbers. That's my strong recommendation. And in addition, or on top of that, I can also tell you, in my perspective, 21 makes the most sense, since that's really a common number used for indicators. Really common. You don't even know how common. Like most of like the big traders, they only use those numbers only. They would never even, me also not, I would never even take any other number into consideration, since that's what we actually want to look at, And 21 is also good because it's an appropriate amount of candles to take into consideration at an RSI indicator. Yes, speaking from experience. Something else that's shorter is too short, and something bigger is too slow, So for me, that's what I'm always going with. But make your own research, make your own decision. Yes, let's continue. So we have, don't think we are done, guys. We are just through the concept. Now I really need to show you show you the 3 different signals that you can get out of the RSI. Okay? And one of them we spotted already, but we will find better examples, and I will show it to you more in detail. But actually we will go through 3 concepts of what the RSI can do. First of all, normal buy and sell signals. Second of all, divergences. and third of all, convergences. Okay, you need to understand these three concepts really well, and it is very necessary that you do. Then you're absolutely set to use the RSI indicator for life. You will be an RSI pro. Okay, first of all, I want to start with the most simple way to look at it. You can see that on the RSI indicator there is a black area on the top and a black area on the bottom and a purple area in between, right? And you can see also there are numbers on the side. So the black area is going from 0 to 30 on the downside, and from 70 to 100 to the upside. And in between 30 and 70, there is this purple area. And you can think of it as long as we're in purple, it's kind of a neutral area. You can just go with the trend. But as soon as we go into one of the extremes, the top or the bottom area, we are in a so-called overbought or oversold region. Okay, which is not a buying or not a selling signal yet, but it's already a sign to be cautious. Okay, so whenever we are on the top here in this black region, if you're in a long, you should at least consider taking some profits. Okay, you should get a little bit cautious, because at any point when we're at the top, I mean, we can always continue, but at any point when we're at the top, we can turn around, go to the downside, and in a moment the indicator goes from the top to the middle part. It's considered a selling signal on the RSI, and the same vice versa. If we dip here in the black area, you should be already cautious if you're in a short, since we are so-called oversold. But once we turn around and go back in the purple area, that's a buying signal. Okay? And if we look at, I will just highlight on the chart to you the previous signals, so you can just check for yourself if they played out or not. Well, we have one here, okay, buying signal. It was here. I mean, we went up from 36 to 46 afterwards. We had one here, which was basically at 20k, and here we weren't in. We had one here, which was basically at 24k. Yeah, and then there was no buying signal after. Let's check out where we had the selling signals. So we had one here, boom. So some profits were taken here, let's say. So if you bought there, you could have taken profits here. If you bought here, let's check where the next one is, where he gave us one already here on the chart, where this happened. And then one later on right here, where this happened. And then one later on right here, where this happened. Yeah, so you get my point why the RSI gives at least not bad signals, buying here, selling here, buying here, taking profits here, selling here. The thing is, if you only have the RSI, well, you would have probably closed the trade here completely, and you would not even know that there will be a second and third take profit to reach. But if you are following the Elliott wave analysis, then you already knew, since based on this 1-2 setup, that there should be a 3 following, and you would have at least expected this target. So basically you could have taken some profits here, some more here, bought in here later when you saw the RSI was pretty low as well, and taken all of it out later there, So the general signals you're getting with the RSI are not bad. You just don't know how far will it go further, and because sometimes you are getting 3 selling signals after each other every single time. They were not bad because they were kind of at the top of some place, but they went higher. So you needed the knowledge to be bullish in general to really take advantage out of it, to really take this buying signal on the RSI really serious, and those selling signals not so serious, and that last one very serious, So you needed also some additional knowledge to really take the full use case out of the RSI. But in general, it was a pretty nice performance, right? And this way to use the indicator is also obviously working on all the other charts. But the higher the time frame, like all the other assets, all the other time frames and so on and so forth, but the higher the time frames, like the daily chart, the stronger the signal. So if you get, for example, a buying signal on a daily, then well, a selling signal on the 1 minute time frame or 5 minute time frame is obviously not as strong as that. But it doesn't mean that the buying signal on the daily will be necessarily right at this time. For example, I give you one example. Well, I would think, as of right now, yeah, I would strongly suggest this. So well, I will show you now a small thing, a small 2 minutes of Elliott waving, and then you will, you know, like you don't even need to understand that yet, I will teach you later, but then you will get my point, what I'm talking about with the RSI, okay? So well, I'm, for example, seeing this as, you know, like for example, this was an impulse to the upside, so this needs to be some kind of correction to the downside, and the only way really for it to play out well is if this was an ABC here, this was an ABC here, this is an ABC here. So first of all, this C wave is not done yet, but second of all, it will result in a WXY later on, once the C wave is done, and the C wave will be done, yeah, kind of here. I mean, minimum target to the downside is the 45,000 US dollars, yes. So what you will see right now is that if we, for example, fall here lower, we already got a buying signal on the RSI. But what oftentimes happens, if we look, for example, here at this low, or I mean, that was not such a good example, let's check out another one. But what oftentimes, for example, happens, since we had here 1, 2, 3, 4, so there is actually 1, 5 missing, so actually one more crash. If the chart comes down to here and bounces from there, the RSI doesn't need to go lower there. Sometimes it makes a higher low on the RSI and a lower low on the chart. And what does that mean? That is actually our second way to look at the RSI indicator. That's a so-called divergence. That's what I'm personally expecting here right now. That's also another way how to use the RSI indicator, and that's why, for example, in this case, if we see that, it will be very nicely supporting my analysis right now. Well, there are bullish and bearish divergences, but you need to imagine that if we would make a lower low on the chart, then it would look on the chart very bearish, right? Like as if the chart would get only weaker. But if at the same time, when the chart gets lower in the prices, the RSI makes a higher low in comparison to the previous one, then there is an unproportional balance of the price movement and the actual sentiment of buyers and sellers, right? So this is really called a bullish divergence, if this would happen. And also the same thing applies to the bearish side, of course. Wait, here it didn't really. Yeah, for example here, okay, that's a great example. Well, let's mark the higher highs and higher lows and lower highs with trend lines, okay, so that they can clearly see visually. Let's say this high on the chart, well, I need to delete here these previous drawings. So let's say this high on the chart was lower than this high, right? So only looking at the chart, you could think that this high on the top was stronger, since it was higher. But if we at the same time look at the RSI, you can see that this high here was high on the RSI indicator, and these highs here were lower. And if we really draw now a trend line here as well, you get the concept, right? Higher highs on the chart, lower highs on the RSI, indicating weakness on the chart, and boom. So that's the power of the divergences that you can draw or find with the RSI. And for example, we would have the actual same result if we see this right now. Just imagine, as my analysis is shown, we see lower lows on the chart and higher lows on the RSI, yeah, well, this would, in the other hand side, indicate strength. So as the bearish divergence turned it down here, the bullish divergence that I'm expecting here will turn it up there. So that's very powerful. That's also some advanced shit, you know. That's why I'm really saying I'm taking the time here and telling you everything, okay? I hope you are. You know, I'm wondering how many people will ever see that. I'm making sure it's the most detailed RSI indicator made with the most love and explanation you can find. And I'm happy that you see it, guys. I'm happy that you see it, guys. So I told you what. So I told you about the first buying signal, I told you selling signal, I told you divergences. Yeah, well, the last thing that you can actually get is something similar from the concept-wise, like the divergence, but it's just in confluence, so it's called convergence. Well, let's find an example for that as well. Yeah, I think here we see pretty well ones. Oops. So, for example, yeah, that's a pretty good one. If we check out here on the chart, we have higher highs, and on the other perspective that we looked before, we had lower highs on the RSI, right? As if it would crash. But here in this scenario, you can clearly see on the RSI even, well, it's also higher highs on the RSI. So higher highs on the chart, higher highs on the RSI, indicating really a lot of strength being left there, and also for it to be able to continue to push further to more higher highs, since there didn't form a lower high at all. So already by seeing those two highs and the RSI, you could have imagined, whoa, we have a bullish convergence there. We can actually, you know, look out for long entries. So it's also very, very powerful. Until the moment, you can now see how this concept plays out. You see higher highs on the RSI, boom, boom, you go long, long, long all the time, like always when it dips, and then once, like until that high, let's point it out. This was the higher high, boom. So, and then once this high happens, this was the first lower high on the RSI, right? This was the first one. Everything in here between, you knew already it's gonna go up by looking at bullish convergences only, you know, because it was so clear. And then once at this moment the bearish divergence started, because you can see here we have higher highs on the chart, boom, lower highs on the RSI, so you started here searching for short entries, and bam, it played out. So that's really powerful, divergences, convergences. I really hope you get the concept here. So technically you can, with the power of buying signals, selling signals, divergences and convergences, so only by using the RSI, really act profitable, because you know, like you see, bullish, and once it's bearish on the RSI, it's not even bearish on the chart yet, so you can even take the full profits and go short. Yeah, so it's something really powerful, you know. Usually RSIs for usually other indicators like MACD or so, bro, when it crosses, you are already half your profits are gone. But the RSI, like the divergences and convergences, it's really like, whoa, we are at the best moment right now, and we see a bearish divergence. Okay, then let's close and go in the other direction, you know, easy. So that's why I really love the RSI indicator. Really, it's my personal favorite. I hope I made the information to you also in a way that you understand it fully and that you enjoy it and you will use it and so on, because it's really a good one. It's for free. All I'm telling you and saying to you is for go trading, you RSI, check, it's for free. When you use it, it's nice. I personally use it. I mean, don't expect it to always be right. You know, like always, chart analysis, it's a game of probabilities. Never forget what I taught you in risk management and trading psychology, because that's the knowledge foundation that we are even going in the chart analysis with. So if you don't have the mindset and all that you need in order to execute the chart analysis, you will have it very difficult. But let's hope you are well. Also, how are your runs going? Honestly, leave it in the comments. Or are you doing something? Are you really? Because it's necessary. You will, because as you can see, the chart analysis pro, you will easily be able to make profitable trades by chart analysis. It's very accurate what I'm telling you and so on, and you will be able to use it very nicely. But if you lose your mindset and so on, you will destroy everything and abort the process. So that's why I'm really making sure that you are still keeping up the run, because I'm telling you right now it's the most difficult phase, because it's the middle. And I tell you something about the middle. That's the hard part. That's where everybody quits. Okay, today, day 21 of 42, that's where everybody quits, bro. You know, not at the beginning where everybody's motivated and say, yeah, let's go running and make some money. No, bro. And also not the end, you know, when there's only 2-3 days left and everybody knows already, okay, we're done nearly. No, it's exactly right now, day 21, where your toes are blue, your knees are hurting, your muscles are sore, everything is bad, whatever, you know, and you think, man, it's only half, I have other half. But that's where we need to double in the motivation and the dedication. Stick to the plan, okay, and execute, keep showing up, and keep doing our stuff, guys, okay? So, with that being said, I hope you enjoyed the video, and we see each other in tomorrow's video where we will go over some other indicators. Not all of them, obviously, but some of them I will show you. And yes, have a very nice day and see you tomorrow. Ciao, ciao.